Alright guys, so this is the trade that I just described in the last video. Now this is the third time today that I wanted to enter this long, and the volume in London was just so bad. It kind of maybe put me off a little bit, but you know, based on candle anatomy, I watch the candle come down, and if it respects the wick, so the wick and the wick and the wick, and then it moves up. When it moves from bearish to bullish, it should move up, okay? Now, the mistake I made was a safety one, okay? Because if you look at this candle here, right, it came down and it actually broke this low, didn't break this low, didn't break support. If you look on the 30-minute time frame, what it did is it did come down, it rejected this area, and I entered on the break of the high, right? So the spread actually caught me out a little bit. If we look right down at the 3-minute time frame, so as we broke up here, I had my order, which was a limit order, sorry, not a limit order, stop order, and it tagged me out just above, bit too high really. And I was just looking at this price action to take these highs here, and I thought with the bit of volume it can break through and I can pass the 200k challenge. So automatically, if you can look at this lower price action, all right, I just wanted to kind of trail my stop, and if we zoom in right really close here, I mean, I've probably just gone to the bottom of this candle. I placed 5 pips on it. It wasn't anything else. It was 5 pips. I didn't like move this up and down and say, right, I'm gonna have it here or I'm gonna have it here. I just put it at 5 pips because I wanted to cover the commissions and, you know, make a little bit of profit should it have come back down. Because what I could have seen potentially happen was that it would have come back down into drawdown and it would have taken me out in profit, which I would have been quite happy with, and then it would have re-broke the highs. So it would have given me like a second entry, because this candle did come down. This candle had very, very little wick to the upside, so it could have gone either way. Now, I may be annoyed at the minute because I could have passed my 200k challenge here. But that being said, I didn't take a loss, and this could very well have happened the other way around. Okay, so you got to bear that in mind. Just because I was right this time doesn't mean I'm going to be right every time. Okay, if it had done the opposite, then I would have been even more annoyed. So I'm happy with the very small amount of profit that I've got. I'm going to move on. I'm not going to chase the market. That is it for me today. I'm 5 pips in profit, okay, which, you know, on a 200k account, it's not actually that bad. So yeah, that's it for this trade, and that's going to be it for me today. But the power of the 4-hour flip, okay, so if we're coming down into support, so here's the support, okay, we've got a high, we've got a new higher low, okay, we've clearly closed above the 2650 level. Wait for this wick to come down, and then as we're passing the 30-minute or the 15-minute even, and this is the open here, this blue line, that's the opening of the new 4-hour candle. As it flips bullish, normally it follows through enough to get to break even, which is what it did today. So it's an excellent entry. It's one of my favorite entry types. In fact, it's probably the most consistent entry type that I have. 6 a.m, 10 a.m, and obviously 2 p.m, which is now. Okay, so that's the trade. That's it. Unfortunately, it took me out at 5 pips profit, but I didn't pass my challenge, but I will pass it. It will be passed in the next couple of days or so. So I'm not overly worried, not chasing the market. Let's just play the game, follow the rules, stick to our risk management, and eventually, yeah, the account will come and profits will follow.